Well, hello everyone. Happy New Year. Welcome to Trading a Smaller Account. I wish I could tell you that, I have like scratched, lines, in a wall somewhere, how many years we have been together trading a smaller account. I think it's probably, this is the beginning of our fifth or sixth year. We're not supposed to have favorites, but I got to admit, this is one of my favorite classes to teach. And today is the day that we roll our account back. So we're going to reset our account. I saw in one of the surveys, and if there's a survey, I always say, I promise if you fill it out, I'll read each and every comment. Well, here was a comment in one of the surveys. Is there a class on stopping us from hitting the panic button? And I think this was in Getting Started with Options. And this is that class, my friends, where the rubber hits the road and we talk turkey and, I try and tell it like it is. And so today we're going to look at placing a bunch of trades, of example trades in our account once we reset it. But I want to spend a few minutes, just in case you've never gone to the Getting Started with Options series and watched that class, the 7 things I wish I'd known about trading. I want to just do a quick review so that we can fix our mindset. Because if your mindset is messed up, the rest is a moot point. Because then you're going to get tricked up and you're going to end up hitting the panic button when you should. You're going to end up second guessing yourself, and we're going to end up with paralysis by analysis, and the confused mind does nothing. So how do we avoid confusion? And we do that with discipline and consistency. So we're going to start with kind of 6 tips to help line you up for success, and then we're going to kind of implement that by going out and placing some example trades to start our account over. So if you are not following us in the land of X, my handle is Barb Armstrong CS. I am posting on a daily basis, and I certainly hope you will join me there. I want to start by thanking you for making this such a rich class by showing up each and every week live when you can. We've got Truth Will Always Prevail and Riceberg and Carol and See Me Go. Like, I love some of these handles, and Sim Architect and Krishna and Trade and Grow and Richard and Debbie and Trader Jane and Daniel and Harry was the first one into the chat this morning, and Chad and Paul and Jules, and thank you so much for showing up every week for this community and for yourselves, for your future selves, for your family. I appreciate it more than you may know. And I'm just checking here. I know that there will be somebody joining the chat. And so if you've got questions, okay, please don't hesitate to ask. Apparently, we've got Connie in the chat, and Connie Hill is a friend and fellow coach. So if you've got questions, don't hesitate to ask. Her handle on X, Connie Hill CS. Okay. Yeah, and somebody's saying, like, I'm here even though, like, I've got cold and body pains. And you know what? Those that are dedicated, I mean, you can have reasons or excuses, but the two don't go very well together. So I'm glad that you had a reason to be here and you didn't let excuses like body chills get in the way. Okay, so let's get through our important information so that we can get out to the platform. Know that we trade a lot of options in this class. Options do carry a high level of risk and aren't suitable for all investors. If you have been busy trading in paper money, know that you have to apply for option trading privileges in your live account, and then not all will qualify. We use the paper money platform on the Thinkorswim desktop. And it is a brilliant place to learn and to hone your skills so that if and when you decide you want to trade in your live account, you know when you're getting in, when you're getting out, whether the trade goes for or against you. You know how to position size appropriately. You have a trading plan and you know how to follow it. You understand the mechanics of how to place a trade. All of these are important skills to develop on a strategy by strategy basis. And know that there are some nuances and differences between the platforms, and we'll discuss these as we go along and as they become appropriate. In paper money, short options will never be assigned early, and that can happen in a live account. So we want to be aware of that. Okay, so this year, and I've had people asking me for 2 months, like, when are we going to reset the account? Well, today's the day, and I'm going to show you how to do that. The last, I think, 4 or 5 years, we've started the year with a $20,000 account. We decided to go with inflation this year, and we're going to reset it to $25,000. For no particular reason. Our max position size is still going to be 50,000. And some of you may look at that and say 50,000, or 5,000 rather, that's 20%, right? That's 20% of our account size. And yes, you are absolutely correct. Mathematical whiz kid that you are, it is 20%. Now, if we had $1 million account, and if you came to Trading After Hours yesterday, we did set up a paper money $1 million account, and we said that our max position size in that account is going to be 5%, and that our max trade risk is going to be 1/3 of 1%. But when we're starting out with a smaller account, this max trade risk of 500 represents 2%. At least I think it's 2%. If I take 25,000 times 0.02002, it's it's 500. So we're risking 2%. And last year, our account grew substantially, and yet we never changed our position sizing rules, and we never changed our max trade rules. And we probably wouldn't have until these numbers got to represent 1% of our account balance. Okay, so that's what we did. Our focus in this class is on a short to intermediate term time frame, although we did end up with a couple of growth stocks, where we were still in them at the end of the year. And one of those was GoDaddy. So we could look at, GDDY, do we want to add a new position? Now, if you were in a live account, you wouldn't be resetting it and just wiping things out, the good and the bad. We'd just be continuing on, right? Yeah. Yeah, so, and we're looking at both bullish opportunities for stocks and options, and we're looking at bearish option strategies. And there was one year, about 3 years ago, I think it was now, where, the S&P was down 18% at the end of the year. The NASDAQ was down 30. We spent a lot of time doing bearish trades. We'd buy a put with a 1 ATR target. We did a lot of long put verticals. Last year, we didn't do as many bearish trades. We did some, but the market was up, 20-some% last year. So, we kind of run where it's hot, wherever that may be. And I think that's the beauty of taking this theory that you've learned in understanding different option strategies and then coming out and applying it. And in this class, we do a lot of application. Okay, that's our focus. It's an intermediate to advanced level class day to day, in that I'm expecting that you understand what a long call vertical is, what a short put vertical is. And if you don't, this is going to be a bit like drinking out of a fire hose, and that's okay. Because I will always put a link into the Getting Started with Options series. And then we're in the Trade Management mini series sessions. We're creating a list of example trading plans, and you can go to those for reference also. Also, if you're new to Thinkorswim, if you scroll down to the bottom of that Trade Management mini session rotation, you'll see a bunch of classes on Thinkorswim, just short videos that answer a lot of the questions that I get day to day. Okay, so did I make a mistake and put in this blank screen? I actually did not. I did this on a purpose. So what I want to do is just spend a few minutes reviewing. And I know for those of you who've gone through the Getting Started series, you've seen this before, but let's call this like 6 tips for trading success. And it's not a guarantee that you're going to be successful, but I can guarantee if you don't pay attention to these, you are likely not to be as successful as you might want to be. So number 1 is to have a goal and know what your goal is. Is your goal to, generate income? Are you retired and you'd like to supplement your income? Or have you taken a job you're really passionate about, but it doesn't pay as much as you would like? And so you'd like your investments to generate some additional income for you. And then don't just say, yeah, I think that income thing sounds great. Like how much? By when? And somebody said to me, in a comment, like, it's stupid to think you could have, and their word was stupid, not mine. It's stupid to think you could have a $20,000 account and end up making, generating a weekly income. But if you said, okay, my goal is to make $100 a week on average, have we done that? Sorry. Have we done that in this class? Well, last year we were up over 100%. So we took that $20,000 account to 40. So, if you made $100 a week by the end of the year, you'd be up 5,200. So we would have been at 25,000. We have done that every single year in this class. So it is a possibility. In fact, could we have a goal of 200 a week? We could. And is that a possibility? Yes. Is it a possibility when the market is tanking? Yes. Because our second best year ever in this class was the year the markets were really down. Most of our money sat in cash. And then we actively traded small, short-term, and following our risk guidelines. We pulled out those tools that can work well when the market is, or a particular stock is falling. And so, I talked to someone at a live event. I forget where we were, whether it was Chicago or we were in, San Diego or where we were. But, he said, what I'm trying to figure out is how to meet my goals. It's like, what's your goal? Well, his goal was to make $100,000 a year in trading. And I said, okay, well, that's, if we call it 8,000 a month, 8 times 12 is 96. That's 8,000 a month. That's 2,000 a week. What strategies are you comfortable trading? I am not a financial advisor, so I can't give you advice on what in particular to do with your money. But if that's your goal, then how are you going to achieve that? What trading strategy? And let's look at an example, on a stock using that strategy. And if this one might make $1,000, then how many of those do you have to do in a week that are successful? And you have to keep in mind that sometimes trades are not going to go the way you planned. And so your goal is, you've got to have a goal. And then your goal might be protection. I like to say protect your giant heap, but some people might say, like, I don't have a giant heap. I want to create one. I want to, build, a heap. Okay. So, but have a goal and know what you're aiming for. It may be just to beat the benchmark. So this year, when we'll look at the S&P and the NASDAQ, they were each up, healthily over 20%. So if that was our goal, our $20,000 account, we would have said we were successful. If we were at 25,000, we would have been up 25%. So that would have been beating our benchmarks. Okay, but have a goal. 2 is, if you're learning these strategies, so these trading strategies, I took the Getting Started with Options course when I first started investing in 2011. And I thought at the end of the course, well, I should be able to, trade all 11 of these. It's like, yeah, no, that did not work out so well. So I would say pick one strategy at a time that makes sense for you to pick, and only you can decide which one you want to master first, but one that's congruent with what your goals are and what your risk tolerance is and the amount of time you have to dedicate to this. And I would say, so pick one strategy at a time, max two. And trade it in your paper money, develop mastery. Okay. And then we are going to create trading plans. Okay. Okay, here we are, 3. You want to create a trading plan. If you want to know a way to stop yourself from hitting the panic button, having a trading plan will do that. Okay, so have a plan. And then here's a news flash: follow your plan. I know that's a blinding glimpse of the obvious, but hey, I'm just going to say it, because sometimes we create a plan, they go, I had a plan somewhere. It's in a drawer. I have so many papers on my desk. I can't find it. Yeah, find it. Know it, so that, like I like to say, if I went to your house, and I'm not trying to be creepy, but if I went to your house and woke you out of a dead sleep in the middle of the night and said, if your trading plan is long call verticals, if I woke you out of a dead sleep and said, when do you get in? What's your position size? When do you get out? You would know it like you know it, like you know it. That's how well you need to understand your plan. And what do you do when things go wrong? Because I don't care how brilliant you are, if you trade a lot, there will be times when things go wrong. Even professional traders who they do this at an institutional level, mistakes can be made and will be made. And then, so having said that, plan for loss. And that's just another way of saying position sizing is the, trader speak word for it. And this is critical. And I get most worried about this when we've had a lot of success, which we did last year, which we have had every year. But like right after the election, we had 14 or 15 trades within 2 days that hit their targets. And that's when the voices in your head start saying, I'm really quite brilliant. These position sizing rules are for mere mortals. And obviously, I'm a wizard. So I should, I should double my position size. And that's when you should become afraid, be very afraid. And so there's another coach, his name is Scott Thompson. He's now a manager. And he says, what's your sleep number? And by sleep number, he's not talking about just the bed. And I have one of those and I love it. Haven't changed the sleep number on it in years. But if you had one trade go wrong, that's one thing. If you had 10 trades go wrong, like we had the first week of January last year when I was in Maui and couldn't access my account, are you still okay? And if you're not, then your position sizing number is not the right number for you and you should adjust it. Okay. And then how do we deal with these pesky emotions? Well, if you're doing 1 through 4, these pesky emotions like fear and I call them the 4-letter words of trading, fear and hope and FOMO, are not going to drag you under. Because these trading plans, what these trading plans do is they provide you with a plan. So you don't have to be afraid. When you're getting in, when your plan says you have an entry, you don't have to worry about something hoping it'll turn around. You have a set of disciplines. And if you position size properly, you don't have to worry. And the same thing with FOMO. Okay. Last thing, because I do want us to get to a bunch of trades, or at least, a few, is, I sometimes think we should call ourselves, I don't know why this doesn't want to come back over here. But, Barb's base hit brigade. Base hits can be a beautiful thing. Small wins add up over time. So don't be greedy. You do not, have to hit home runs to end up with a really interesting success over time. Like if we have 4 trades that earn between $50 and $200 a week on average, I mean, we'll see extraordinary results. Okay, so don't be greedy. There was an expression when I was a kid, don't be a greedy guts. So I'll end on that. Like, let's just go for the little win. If a stock moves up phenomenally, we don't have to get the beginning or the end. If we get a little bit of the middle, we'll do just fine. Okay? Okay, so are there any questions on that? Yeah, Riceberg is saying those beautiful base kits. And Wiley puts this in often, that there are online courses that you can tap into. And so, you may want to tap into those as well. Like I just wanted to learn it all when I first started. And I thought, I was so excited. My car could have driven itself home when I was first introduced to this stuff in July of 2011. And I thought, I'm going to commit an hour a day, at least 5 days a week. I lived a busy, crowded life, but it's like I can find an hour a day. Now, in this after hours class, like for you guys, you're here at noon Eastern. So you have found a way to be able to be here. But some people, they work a full-time job and they get home and the kids they got soccer and dance and homework. And, so their time is at like 9 o'clock at night. So this new class on Thursdays is designed to help those people that can't really look at the markets during the day. Okay. So let me just, before we go over, I just want to show you the new schedule. So here are the webcasts, schwabcoaching.com. I know that most of you already, have this pegged, but if you don't, there will be a link if you're watching this in the archives. I've also just put it into the chat. But here's the new schedule. And this is, I've put my name in so you can see what I am teaching. And what I've been thinking about this for quite some time. But what I've decided to do with this is on a regular day, let me just change my drawing tool. So we've got trading a smaller account on Mondays and Fridays. And those we're going to use the same account. And then trading price patterns, I will treat as a companion class to this. And so we'll be placing trades in our trading a smaller account class from this class. Now we may place some trades in another account as well, but I'm going to treat this as a companion class. So we'll be meeting 3 times a week. Okay. Then the other 2 classes that are new to me this year, one is getting started with technical analysis. And my focus for this class is going to be on the things that I use. It's getting started, so we're going to keep it simple. We're going to talk about candlesticks and trend reversal patterns and breakout patterns and pennants and all that kind of stuff. And we are also going to actively trade in that class and place example trades. And so, it's going to have a little bit of a new approach in that class, and I can't wait to start that. And then after hours trading is at 4 o'clock Eastern on Thursdays. And I've just described kind of what we're up to there. And it's going to be a mixture of stocks and building a stock portfolio, but also I attended a class years ago called the 4-Day Live, where we looked at 7 or 8 different, like half a dozen different trading strategies that you put them on after the market closed. So if you're somebody that can't be there when the market's open, and you can trade these at any time, but we're going to focus on some short-term trading strategies as well, that you manage both the entry and the exit outside of market hours. Okay, so that I'm pretty excited about too. So that's the schedule. If you want to see the whole schedule, easy peasy, lemon squeezy, you just come up here to all coaches, and then you can see that for today, for example, Next one up is advanced charting, and then advanced options with Brent Moores. Then there's a ThinkScript class that Brent is going to teach 2 back-to-back. So, he's just a great guy, and he's a very strong coach. And then Mr. James Boyd, who I think most of you know and adore, will be covering market movers for Ben, who is in Dallas teaching a live event today. So, but you can see the whole lineup day by day. Okay, so and I know that we've spent more time on that than we normally do, but, I was kind of wondering, Santa Claus Rally, where art thou? And I have this little year-to-date thing up, which is really handy once we're a bit further into the year. But what I tend to do in this first couple of months is I come to below patterns, a squiggly line, and I change it to show price as a percentage. So if I have a 1-year chart up here and I come over to the SPX, we can see, in the last year, this index is up 26%. So even though we've had a bit of consolidation here, 26% is nothing to sneeze at. We're still below the 30, which has some people with their, knickers in a bit of a twist. But we're still, when we look at this from a longer term, this 100-day moving average has been acting as a support level. It didn't even get really down to the 100-day moving average. And it's kind of come down like old resistance. And this is the kind of stuff, we'll be talking about in that technical analysis class. So whether you're new to technical analysis or a seasoned veteran, I hope you come to this. It'll be a lot of fun. But, old ceiling, new floor, or old resistance, new support. And here we are bouncing again. So I'd say the bulls are still smiling. Now, the bears, if you want to, get your bearish, gig on, the bears might be saying, well, you rosy cup half full people annoy me. What I'm seeing is a potential head and shoulders pattern here. It's annoying me because it's bouncing today, but so here's our head and shoulders, but it hasn't broken through, has it? And it may not. So sometimes these patterns come through and sometimes they don't. So we'll just have to wait and see how things play out. Now the NASDAQ, in the last year, up 30% as of today. Like that is bullish. And we're flirting here with the 30-day moving average, have been kind of playing a bit of kiss and tell here. The bulls will feel better when it crosses back above. But, we're a long way from the 100-day moving average. So, could this be a bit of a sloppy-ish head and shoulders? Perhaps. But it could just be a bullish trend continuation pattern also. Okay, so I want to whip through these quickly so we can get out. So our Dow, it came all the way down to the 100. Like this one, got more hammer smashed with this lack of Santa Claus rally. December, wasn't such a hot month. But it's still in the last year up 14%. And the Russell, our small caps, which has, I'm going to record another session today, a mini session. So stay tuned and look for that on the power of compounding. This index over the last 30 years has averaged about an 8% return, where, the S&P is, more like 10 and the NASDAQ is closer to 12 or 13. So, but this one last year, up 15% in the last 12 months, again, pretty decent returns, right? Yeah. Okay, so for those that are late, the good news is, this is being archived, right? Right. So there we go. Okay, and the last one is the VIX. Now, the VIX is down today. We're back at 16 to 17. And, we've been in this range for a while, but we spent quite a bit of time this year, if I activate this, down around 12. which is quite extraordinarily low. And the last part of the year, we saw a little more volatility. Now, which sectors have been the strongest? Well, if we look at the 3 months, and I'm pointing this out because a lot of the stocks that we're going to look at are in these sectors: consumer discretionary, communication services, which actually was the number one sector last year. And I have that written down somewhere, but communications was number one, up about, 35%. Well, now, 42% in the last 12 months. Consumer discretionary was in second. Actually, tech, I think, was in second place. And then consumer discretionary up 33%. Technology, up now, it's showing 42. So consumer discretionary and communications really strong. And then financials was just off the podium for sector performance for the year, up close to 30%. So if you're just starting, like we are going to be doing, and saying like, hey, where do we start? Well, we may want to look at something in these sectors. And, like I said, we started with 20,000. We're finishing up on January 3rd. And actually this year, it's not quite apples to apples because we started November 1st. And, did we have some pullbacks? I mean, at one point we were close to 45,000. So, we got kind of hammered in this last couple of weeks of the year. But this is where we finished up. Now, how do we reset? Well, what we're going to do is come to one of our positions. And this is where it's a little bittersweet, right? Like, with GoDaddy, we were up 38% on that position. And some of the stock we sold because we got to the point where we had too big a position in GoDaddy. But you just take any position that you have and you are going to right click on it. And we are going to come to reset all positions. Are you ready? Daniel is asking if I have a list of scripts, and the answer is yes, I do. They're in the post pinned to the top of my Twitter feed, and it's at Barb Armstrong CS. Okay, so this action resets all our positions to 0. Am I sure? Yes. Now you see your default here, I thought it was actually 200,000. So it's canceled. All of a sudden, all these trades we had are now 0. And then you won't see them at all come Monday when we meet again. Then the next thing we're going to do is pick one of these now gone positions, and we are going to adjust our cash. And what I found yesterday when I was doing this for the other account, we want to start with 25,000. So we want to subtract 75,000. And it'll say enter a non-zero amount. So I'm going to make it $74.99 and then 75,000. I just adjust it by $1 and adjust it back. So that'll take us to our 25,000. So bada bing, bada boom. There we are. So we're starting over. Okay. So how about we start with Palantir? Okay. So Palantir just happens to be the stock that was up the most last year. So you might be going, Barb, are you crazy? This stock is up 355%. And look at today, it's up another 5.6%. But I thought, could we do a swing trade? Or could we just buy some shares and add them to our portfolio? And the answer is yes and yes. We could, kind of do either one. But, if we wanted to do a swing trade, we could do that with stock and say, let's just trade it back up to even that $84 mark. That would be a $4 gain on a $79 investment. So if I took it's $79.42. So if I said, if we got out at 84, if we could make $4.50 on a $79 investment, which I'm just rounding to the price of the stock because we're live, that would be a 5.6% return. And so how many shares could we buy if we're buying at $79.50 and the most we can buy is 5,000? So if I take 5,000 and we divide that by $79.50, we could buy 62 shares. Well, let's round down to 60. So let's buy 60 shares of stock. Now, remember, our max risk per trade is how much? $500. Well, if we buy $5,000 worth of stock, how much could we lose? All of it. It could technically go to zero. Now, is Palantir likely to go to zero? Maybe not. But if we want to protect ourselves to the downside, we are going to draw a line here and say, okay, this recent low, which happens to have kissed the 30-day moving average, is around this, like if I hover over this candle, 72.42. So we are going to put our stock, we are going to buy 62 shares. We are going to put our stop at 72.42 times 0.97. And I'm just going to do this on my calculator because I can do it faster. 72.42 times 0.97. So our stop is going to be at 70.24. And we're going to buy 60 shares. And then what's our target going to be? Well, let's say we make our target $84 because sometimes things will come up like really close to the target and then not quite get there. So we're going to come to our trade tab. We are going to right click. We are going to buy custom with an OCO bracket. And the first thing I'm going to do is come over here to the 100 and we're going to make it 60. Because 100 is just a little too many. And that's why we're not doing a buy right either. So if I change the firecracker to a paper clip and then hit enter, it will make all of the quantities match. So we're going to get in at the current price. We want to exit when the price of the stock gets to $84. Okay. We're going to make that good till canceled. Or, and this is like going back to those rules of know when you're getting out in and when you're getting out, whether the trade goes for you or against you. So if the trade goes against us, we want to get out at 70.24. Okay. So how much risk are we taking? We're taking about $9 worth of risk per share times 60 shares. So what's 6 times 9? 54. So that's pretty close to our max risk. In fact, we may want to even knock it down a little bit more. We might say, you know, let's make it 55 shares just so that it's under the 500. Okay, so 55. And then when I hit enter, okay. So now if I say what's 55 times 9, that's under our 500. Everybody following me there? Okay. And Paul is saying, why not a long call vertical? Well, here's the thing. I thought we'd do a couple of trades. And I thought we'd do a long call vertical as well. And we're also going to do a long call. And some people hate it when I do this because they're going, oh, just tell me the best thing to do. Well, I can't tell you the best thing to do. Maybe you don't trade options. Or maybe you're not approved to trade long call verticals. Or yet, you're not approved yet. You know, so, you know, it just depends. So confirm and send, or maybe you're saying like, I would really rather risk less than that. So maybe a long call vertical makes perfect sense. And I'm sorry if the screen cut out, hopefully it's cut back in again. Okay, so this is a regular OCO order with a stock. So we're going to put this into our stocks with a target because we have a target. This isn't a long-term love affair with Palantir. We're just dating. And we're going to compare this to a long call and a long call vertical. Oh, we're just not going to have any more time. Dang it. Man, this goes by so fast, doesn't it? It goes by so fast. Okay, so there we are. So there's the first one. And this is a swing trade. So guys, I'm going to go quickly, but here's the deal. You can go back to the archive. It's the last 5 minutes, and then you know that you can go back and watch it again. Okay, so if we wanted to do a long call and we want to come out, at least 30 days plus the number of days we're going to be in the trade. So at least 35 days, we want to have volume. We've got to have, one of our guidelines is we want to have at least 20 times the number of contracts we're going to trade. So we're only going to trade one contract. And so we can come here and do this 84 strike, we're risking 540, or the 85 strike. And what's the difference? Well, the difference here is the amount of gain we can anticipate. So if, we can anticipate a 44% gain, a 44-cent gain if the stock goes up by $1. If we buy something that's in the money, then we expect a 56-cent gain. So, we could actually come out to February, and these are $5 wide strikes. If we come out to the 90 strike, we've got 10,000 contracts, a tighter bid-ask spread, and again, here's 39 versus 60, but the cost of the option is half. So we're going to do a swing trade here. So we're going to buy custom with an OCO bracket, and we're going to put our stop on a swing trade. We put our stop at half the value. So if this goes down and becomes worth $2.70, we want out. Now we're going to base our exit. We don't know what the value of this option is going to be, but we're going to make this good till canceled. And we're going to come to our sprocket and say, hey, if and when Palantir hits 84 or above, get me out. So we have both a target and an exit, and this allows us to be less emotional. On Monday, we'll review the mid-management rules. Okay. So there's the second one. So we're buying a call because we're bullish, right? Right. We want to exit when it gets to the target at 84, right? Right. Or if it loses half its value. Correct. So this is a long call, and we're going to put this, we're going to say it's a swing trade, and we're going to compare, I can type, to the long call vertical and the long stock, or the stock position that we bought that had the target. Okay? So fire in the hole. Now, the third one, we may not want to come out as far. Maybe we just want to come out to, say, this January 31st. We've got thousands of contracts here, and we could do the 75 and the 80. We kind of like to bracket. Well, it's gone up $1 almost since, I first looked at this. Or could we do the 78 and the 80? So could we buy a vertical at the 78? If we did the 78 and the 79, it's already through both strikes. It just has to stay there. Well, that looks pretty good. And how many of these could we do? We could do 10 of them, because how much could we lose? We could lose $500. Okay, now because we're doubling up, I'm going to do a little less risk. Okay, we're going to do 5 of these, and then we can just extrapolate as a percentage. First trigger sequence, and our guideline is we want to get out when it's gone up 50% or if it's gone down 50%. So we're going to make this 78, I'm just guessing, and make that good till canceled. And then we're going to put that in our long call vertical bucket. And we're going to compare to the long call and the long stop. With swing targets. And we'll just see how we make out. And then I may well compare these in a mini session. And if I do that, I'll mention that in class. Okay. And one of the differences with it with paper money, now, if there were other things you wanted to practice with a swing trade, let's come in a little tighter. We might want to look at a Marvel. And we'll do this on Monday, or a Shake Shack, which is in the consumer discretionary sector, or Net, which is a tech stock, or Square, which has a diagonal resistance breakout today. And each one you may choose, to do your paper trade using a different strategy. But guys, thank you for being here. Welcome to the new year. Know that all the example trades that we place and discuss are for example purposes only. I can't wait to see what the year unfolds. Up next is Advanced Charting with Cameron May. And Monday, I will see you for the next installment of Trading a Smaller Account at high noon Eastern. Take care, everyone. Thanks to Connie and the guys behind the scenes for providing such great support. Bye for now.